Good evening, everyone, and a very warm welcome to today's webinar. We will just wait for just 1 minute and for people to come in and settle down before we begin the conversation for this evening. So just wait for just 1 minute, please. Yes. A very good evening, everyone, and once again, a very warm welcome to today's webinar, the topic for which is the math behind markets, mastering derivatives and risk management with IIM Ahmedabad, brought to you by IIM Ahmedabad and VC Now. Thank you for taking the time to join us today. Financial markets have become increasingly dynamic and interconnected, from sudden market volatility and geopolitical events to rapid technological advancements. Navigating uncertainty has become one of the defining challenges for finance professionals, as you know. In this evolving landscape, derivatives and risk management have emerged as indispensable tools, not only for protecting portfolios and managing financial risk, but also for making informed strategic decisions. Behind these sophisticated financial instruments lies a very strong foundation of mathematics, quantitative modeling, and analytical thinking that enables professionals to understand market movements and make data-driven decisions with confidence. Whether you are an aspiring finance professional, a working executive, or someone looking to deepen your understanding of financial markets, one question often arises. How do you build the quantitative skills needed to succeed in today's finance ecosystem? To help answer this question, we are delighted to be joined by two distinguished faculty members from IIM Ahmedabad. Our first speaker, Professor Vineet Virmani, is an associate professor in the finance and accounting area at IIM Ahmedabad. He holds a doctorate in economics from IIM Ahmedabad and a degree in mechanical engineering from IIT BHU. His research and teaching interests include derivative pricing, fixed income securities, risk management, and volatility modeling. Through his extensive research and academic contributions, Professor Virmani has developed deep expertise in the quantitative foundations of modern finance, making him exceptionally well positioned to help us understand the mathematics that drive today's financial markets. Joining him is Professor Anirban Banerjee, Assistant Professor in the Finance and Accounting area at IIM Ahmedabad. Professor Banerjee has earned his PhD in Finance from IIM Calcutta and holds a bachelor's degree in Electrical Engineering from Jadavpur University. His research focuses on market microstructure with particular expertise in algorithmic and high-frequency trading. His work explores how quantitative models, technology, and data analytics are reshaping financial markets, thereby offering valuable insights into the practical applications of derivatives and risk management. During today's session, our speakers will explore how mathematical concepts underpin modern financial markets, the role of derivatives in managing risk, and why quantitative expertise has become increasingly valuable across investment banking, asset management, fintech, consulting, and risk functions. They will also share insights into IIM Ahmedabad's Advanced Programme in Quantitative Finance and Risk Management, highlighting how the program equips professionals with the analytical, technical, and practical skills needed to thrive in today's complex financial environment. Before we begin the webinar for this evening, a quick note for all of our audience. We will be hosting a live Q&A session at the end of the webinar. We encourage you to share your questions in the chat box throughout the session, and we will take them up, as many as possible of them, at the end of the session too. With that, it is my pleasure to welcome Professor Vineet Virmani and Professor Anirban Banerjee to the floor. Over to you, professors.
Thank you, Treasury, for the kind introduction. Again, welcome to all of the participants to this particular webinar. So what I will try to do is, we have some slides, possibly help us navigate this conversation. Is my screen visible to all of you? Okay. So we'll start by speaking a little bit about IIM Ahmedabad in the very beginning. So, as we know, alongside IIM Calcutta, IIM Ahmedabad is one of the oldest management institutes in our country. It started its journey almost 65 years back in 1961. Interestingly, the first set of programs that were, it's known for its MBA program, but it started its path through executive education programs, like the one we are talking about right now. The sort of flagship program, the PGP, Postgraduate Program in Management, the first batch graduated in the year 1964. So again, we're around 62 years into that particular program. So in around 1971-72, we had the first batch of graduating FPMs or Fellow Program in Management students. Now, this particular program has become the primary source of faculties at various IIMs and other B schools, many of them being in IIM Ahmedabad right now. So, as some of you may be aware of, when it was founded, we had a very long-standing association with Harvard Business School. We also had some sort of association with Ford Foundation in the very beginning when the institute was being set up. It is also a government institute, so we have some sort of a continuing association with the central government as well as the state of Gujarat. We also are associated in different forms with local philanthropic institutions and industries. Now, when we talk about the IIMA, the IIMA Advantage, it is significantly large in terms of the campus area. We have more than 100-acre campus, which is equipped with modern classrooms, accommodations, different hostels, library, a great library, so to say, one of the best in the country, and a great support staff to support all of these functions. In terms of our resources, our primary resources are the faculty members. We have more than 100 full-time residential faculty members, with all of them having PhDs. We also have visiting faculty members coming from different sort of eminent corporate bodies and regulatory authorities. We also have different professionals engaged in the top notch of their own business domain who also come and contribute as visiting faculty members. One of the key differentiators in terms of IIMA is the residential nature of the faculty members. So when you are in the campus, you are likely to run into faculty members on a regular basis, even in hours outside the classrooms, even in the evenings. So we are also quite eminent in terms of our presence in research. We are a leader in management research. We are proud to be so. We have contributed almost half of the Indian publication in management coming from IIMA faculty alone. In terms of teaching and advisory, we have significantly large number of long duration programs and various other short duration programs which keep on running. Some of these long duration programs are very well known in the industry, with PGP or the MBA being the flagship 2-year program. We also have a program, PGP-FABM, which is the MBA in Food and Agribusiness Management. Interestingly, this particular program is ranked 1 in its own business domain. We also have a 1-year PGPX program, which is primarily made for people with work experience. Last year, we also set up our presence in Dubai. So we have started a 1-year MBA program known as the PGPX Dubai program. Alongside these programs, we also have now on presence in a blended mode. So our 2 of our primary blended programs are BPGP and BPGP BAAI. So BPGP is a 2-year program, blended PGP or a blended MBA program, where the participants spend some of their time in campus interacting with the faculty members in a physical mode, where the rest of the time they are going through the classrooms on an online basis. Now, please note all of these are synchronous, so it's live. We also have started a new program called BPGP BAAI with particular focus in business analytics and AI. This is again a 2-year program meant for people with experience who are working on this particular domain, but want to improve their skills in these particular areas. And we also, as we basically indicated in the last slide, we also have our PhD program, which we are very proud of, which is graduating significantly large number of research scholars regularly who are then working in both industry as well as academia, and they are contributing in terms of both research as well as practice. We are proud to train more than 1,500 full-time students and 5,000 executives on an annual basis. We are also advisor to different sort of government departments as through different sort of relationships. Our faculty members are subject matter experts in different domains, spanning across economics, finance, marketing, operations, strategy, communication, and all of these different business verticals. We also, some of our faculty members are also proud to be board members in different government entities, as well as in some cases, also board members in different journal articles or in different journals. We also work regularly as consultant and advisors to not only corporate bodies, but to also government think tanks and high-level committees. So quantitative finance at IIMA, we believe that we have different faculty members who are working in this particular niche area. We have Professor Vineet Vilmani, as Rishi mentioned initially, who has been working in this particular area. We also have other faculty members from our area in finance. We also have people working in economics as well as operations who are teaching as well as doing research in this particular domain. Some of these courses that are getting offered regularly in IIMA across different long duration programs are financial derivatives, computational finance, structured products, financial risk management, quantitative risk management, stochastic calculus in finance, fixed income securities, mathematical finance, advanced derivative pricing, banking and financial services, market microstructure. Some of these courses are more relevant for PGP or the MBA crowd. Some of these are more relevant for doctoral students. Some of these are more relevant for practitioners and people working in the industry in these specific areas. Some of these programs have been running for quite a long time, and we have rich experience in teaching across these programs, based on which we believe we are in sort of a unique position where we can offer this particular program, which is Advanced Program in Quantitative Finance and Risk Management, based on our experience, both from teaching as well as research. Both Professor Vineet and me work in this particular area. We also have other colleagues from our area as well as other areas who are experts in these particular domains who will be teaching across these programs. There are other, as the last set of courses were offered from the finance area, not necessarily just finance area, we have courses being offered from other areas also, which are related to our expertise in this particular quantitative finance and risk management. Some of these courses are big data analytics, financial analytics, and artificial intelligence and machine learning, statistical inference, Bayesian data analysis, econometrics for management, statistical method and data analysis. These are only some of the courses that we have listed. These are some of the courses that we have experience in. There are much more number of courses which are related to our faculty's expertise in this particular area. There are also number of research centers at IIMA who are contributing to research through faculty members who are associated, or also research scholars who are working in these particular centers. Some of these centers are the British Research Center for Data Science and Artificial Intelligence. We also have a Krishnamurthy Tandon School of Artificial Intelligence, which has been more recently set up. We also have a high performance computing center, through which in many cases, for those who are working with large data set, we take help of this high performance computing center for our tasks. We have the Mishra Center for Financial Markets and Economy, which is working on both research, which is academic as well as policy relevant. We also have the newly set up Mattu Center for Research in Security Pricing and Corporate Finance, which is also focusing in specific areas of asset pricing and corporate finance and trying to contribute to the economy as a whole. We'll spend some time about this particular program that we're talking about, which is known as Advanced Program in Quantitative Finance and Risk Management. So to talk about this program is built into three basic blocks. As title of the webinar suggests, we're speaking about the math behind the quantitative finance. So there are similar sort of programs also offered from other institutions where we think we differentiate a lot is based on the core of quantitative finance per se. So the first module is the building blocks. We put a lot of emphasis on understanding the core principles very accurately. So some of these core elements that are being discussed in the first building block modules are essentials of calculus, probability theory, stochastic processes used for quantitative finance. We'll be also introducing the different sort of financial markets and products that are going to be relevant for our discussion in the next modules. We'll be talking about role of financial derivatives in terms of how they contribute to hedging, arbitrage, and other sort of requirements. The first set of products we'll be talking in this particular course should be forward contracts, futures contracts, and then move to options. So we start, even in the building block, we start with the basic principles of derivative pricing, which is known as the principles of move arbitrage. So what we'll do is we'll talk about pricing forwards and futures using these sort of principles. And then we'll start with the basic pricing model, which is known as the binomial model of option pricing. That is what we plan to cover in the building blocks. Will be a significant emphasis on the math part in this particular building block, which takes us to the next step, which is module 2, which is going to contribute possibly almost half of the entire course. In this particular module of Black-Scholes model and its extensions, we'll start from the very basics, as in we'll talk about the Black-Scholes model and how to get to this. So unlike similar sort of programs which just talks about the Black-Scholes option pricing model, we'll talk about how to derive the Black-Scholes option pricing model, the Black-Scholes PDE or partial differentiation equation. So we are going to derive that equation from various sources. So we'll look at different approaches of coming to the Black-Scholes option pricing model per se. We're going to talk about the option price sensitivities. So we're going to talk about the option Greeks, which covers delta, gamma, theta, vega, and all of the others. We are going to talk about some specific features of the options market, namely the volatility smile. We'll also talk about local and stochastic volatility models. When you're talking about volatility models, we are going to talk about some of the models which are used in practice. We are going to talk about models, traditional models such as Arch-Garch. We are also going to talk about ML-based models which are used in the current markets. We'll see what are the differences we get based on the traditional econometric approaches versus the modern machine learning-based approaches. We are going to, so as some of you may be knowing, the most famous Black-Scholes option pricing model is relevant for pricing of European style option, but the same cannot be used for pricing of American style option. So we'll introduce American style option. We'll talk about the features of the American option, and then we'll talk about the early exercise feature. We are also going to talk about barriers in the context of American options. From there, so basic, once the plain vanilla type of options are introduced, we'll go in depth and talk about design and pricing of structured products, which are relatively more complicated products. For that purpose, we'll be talking about the numerate change toolkit. We are also going to, as we indicated, we're going to talk about machine learning models, but not machine learning in general, but machine learning in the context of quantitative finance and especially option pricing. In this case, we are going to talk about neural networks, support vector machines. We'll also talk about AI to build apps for quantitative finance applications. So the third particular module in this particular course is going to be risk management, as a program title indicates. So within risk management, this would be more focused from the bank's point of view. So we are going to talk about value at risk, the market risk models. We're going to talk about CVAR or expected shortfall, conditional value at risk. We are going to talk about other tail risk measures as well. We're going to talk about volatility models as the Garch model, which is very often used. We're going to talk about how the Garch model differentiates itself from EWMA or other form of volatility models. We are going to also talk about applications of machine learning in the context of volatility modeling and risk measurement in the extension. We're going to talk about probability of default. How do we use the Merton model for that? We're going to talk about expected loss, credit risk. In the context of Merton model, we are going to talk about Moody's KBM model of credit risk also. We are going to conduct extensive backtesting, stress testing, and model risk management. So where people who are going through this particular course can have a sense of what is done in the industry, right? It is not just about a single model, but backtesting those on a number of times. We're going to have a survey of advanced topics and way forward. So people who are going through this or participants of this particular program. So as we have indicated, there are 3 key modules. We'll have a completion certificate at the end. For that, people need to appear for exams for each of these modules as well. So for module 1, it is likely to be focused more on the understanding of the key principles. Module 2 would be on the Black-Scholes model. Module 3 would be some parts of risk management, but there may be group projects also given to people where they work on real life data and apply the concepts that I've learned throughout the particular course. I think that's what I had to share from my side. I'll now like to open up for Professor Vinny to add anything that I may have missed, and then we can take if there are any questions from the participants.
Yeah, I think it's pretty good. Thanks, Anirban. All I would say is that some of these topics would, of course, make more sense to people who work in this domain right now. For others who are new to this area, they can expect to learn introduction to these things as well as applications of these things. But yeah, the presentation slightly has a bias towards people who may be familiar with some of these terms like Black-Scholes and so on. But I guess there will be also people in the participants who are interested to learn these things from scratch. And so we try and do the both. We try and do the program in a way where both the beginners and the more experienced professionals can get a lot out of it. And so the program is designed so even if there are some people who are new to this area, should not feel intimidated. The program takes everybody from scratch, from the beginner to the reasonably expert level. We also have I just add one more thing. We also have element of programming, which is using Python and R, which will get used in the projects, also for in-class assignments and examples and application. Coding is not expected as a prerequisite, but of course, it will be useful to have some background. But of course, today with access to AI tools, coding is no more a barrier for anybody to understand quantitative finance. So I'll stop here. And as my colleague said, we can take questions now.
So I see some of the questions. So let me try to take some of the ones I'm seeing right now. So delivery model of the course, it's a 64 session course, out of which we are planning to cover 1/4 of it in campus modules. So there'll be one in-campus module in the very beginning and one in-campus module at the end. The rest would be covered through online sessions. So 48 sessions are likely to be covered through the online mode, and 16 of them into in-campus modules. So is math or stats degree required? Math or stats degree may not be required, but basic knowledge of mathematics would be required. So we'll be encouraging people who have at least mathematics at the 10+2 level. Mathematical familiarity is required. So basic understanding of calculus would be very useful. We need to give CAT exam. No, you don't need to give CAT exam for this, because this is not our longer duration 2-year program. This is an executive program at the end of the day. So you don't need to give CAT exam. Some of it is moving fast. Let me see. So considering this,
Anirban, while you're going through the Q&A, and I'll just add to one more what you said about mathematics. So the webinar title is, of course, Math in Derivatives and Risk Management. So of course, math is a big part of this program. So anybody who is not comfortable with mathematics should not apply. Let's be very, very clear. There's no beating about the bush. If you get scared of calculus or statistics, no, this is not the right program for you. There are other programs at IIMA that you can consider. But if you're curious to do this program without having mathematics right now, you should work on it in the next few months or a year and come back next year, next batch. But math is a very big element of quantitative finance. Many of the models that my colleague talked about have a strong element of probability theory and stochastic calculus and stochastic processes. So it will be very, very hard for people who do not have a reasonably good understanding of maths at +2 level and perhaps even beyond. So what my colleague said, 10+2 is only a bare minimum that you must have, and no scare of mathematics. But ideally, an ideal candidate would have some maths in undergrad program also, be it in economics, engineering, physics, chemistry, mathematics, computer science, whatever it is. But math is a very strong element because the nature of the world that we live in today in derivatives pricing and risk management, math is a very strong part of that. In fact, even regulation document that RBI puts out under Basel norms is also quite mathematical. So even that will not be familiar or relatable unless one knows mathematics really well. So I cannot overemphasize, or sorry, we cannot overemphasize the importance of reasonably good mathematics, or at least no scare of mathematics for doing a program like this. Yeah, sorry, Anirban, yeah.
No. So I think there are quite a few questions which have been posted. If I can request Shreyasi to just help us guide through some of the questions,
course.
have curate them.
Of course, Professor. Yes. And before I put forward the questions, I would also like to tell all the participants that we would be allowing you to raise your hands in some time. I see that 2 people have already raised their hands. Please bear with us. We will first of all address some of the queries that have been shared on the chat box. Post that, you can raise your hand and we'll try to take up as many queries as possible, which the professors will address themselves. Right? Yes. So somebody had written that, do you need a CAT score to join this program? No, not at all. There is one other person who has mentioned, I'll just try to go chronologically, just a moment. Yeah. The delivery model we have discussed some time back. The professors have addressed that, and I would also be sharing some details about the program in some time. Is math stats degree required has also been addressed. So Shivam Bharadwaj has a question. Being into quant trading and planning to switch to a hedge fund manager, can we put a little emphasis on how this course would help me with hedge fund management?
So let me try. So if you want to work in a hedge fund, of course, first thing you need to do is signaling in terms of having a degree from a reasonably well-known place. Other is having the skill set required. The skill set is not too difficult actually. So what we are doing in the program is the many books available. If you go to any e-commerce website or at any IIMA library also, the books are all available out there. But it turns out the barriers to entry are somewhat high in this domain. So what we are trying to do here is build that bridge, that people who are interested to learn mathematics and stochastic calculus for these applications, we provide that learning in this program. Getting a job is a different matter altogether. That requires different kind of street smart and awareness. So if we have those targets in mind, well, we believe that our program signals the fact that you know this stuff now. Whether you can get a job based on that is a matter of partly luck and partly your ability to push your CV to the recruiters. But I think this program will get you reasonably far ahead in terms of the skill set required for the first couple of interviews. So that I believe with IIMA brand name and IIMA reputation should get you. Whether you are able to do well in the interview, of course, that's up to you. And what else you offer to the recruiters in terms of your previous background. So that, of course, one cannot reduce the importance of having a quote-unquote sellable degree to the recruiters. But this program provides the skill set required to get there, to complement whatever else you already may have.
Yes. Thank you, Professor. I move on to the next question. How cutting edge is the course, assuming there is continuous research in the respective fields? Would you like to address, professors?
So we try to bring in the latest sort of elements that are being used in this particular domain. Some of the pricing models have been there for quite some time. So the Black-Scholes option pricing model is not new. So there is not much cutting edge to say in that regard. But then we're going to talk about throughout the different courses, we're going to talk about modern advancements. Often during the courses, we refer to more advanced research papers where people are seeing some of the incremental benefits to using it or some of the incremental benefits of using more refined models, so to say. So wherever required, we're going to bring those elements in. We do not stop at the Black-Scholes option pricing model. We talk because we also indicate what are the problems associated with the Black-Scholes option pricing model. We go beyond that. We also discussed Heston model as one of the alternative models that we use in this particular space. And in terms of cutting edge, as we indicated, we frequently refer to research papers in this domain. We also talk about some people are curious about the application of AI and ML in this particular domain. So wherever relevant, we are going to bring that into the classroom as well. We're going to show you what happens with AI ML applications. In some cases, it may be seen to be beneficial. In certain other cases, it may not be seen to be that beneficial. We are going to argue both sides based on the case that's being presented. I hope that answers the query.
Thank you, Professor. I'm moving on to the next question. Is there something about algorithmic trading? Is the question that we have now.
So this course is not necessarily a course on trading per se, right? We are going to introduce the products. In many cases, when you're talking about algorithmic or high frequency trading, it involves coding my understanding into programs, right? So what we would focus on is pricing of these particular products. People can use some of those understandings and then concentrate on conceptualizing and then coding it into programs which they can use for algorithmic trading and HFT. But algo trading and HFT is not necessarily about just pricing. So we are going to talk about the elements which has to do with the pricing part, but we may not be talking about how to implement them through algorithmic and high frequency trading strategies. There may be some other courses which are specialized in that. This particular program does not have how to trade as part of one of the focuses. Okay. But we also believe that if you see the algorithmic and high frequency trading activity, a lot of that activity is concentrated in the derivatives market. So people who go through this particular program can gain some sort of a knowledge which they can then translate into their trading strategies. So it's not to say that they cannot benefit, but the benefit may not be directly in terms of how to trade and how to codify them into trading strategies per se.
Right. I move on to the next question that we have. Okay. The person thanks us for sharing the details about the modules. And the question is, please could you confirm when you mention it for beginners as well, how much of a basic knowledge is required, as some of us are not from the calculus or high math background. Additionally, I believe the program would also require, okay, on-campus attendance, let me answer the query before I give the forum to the professors. So your campus attendance, everything would be taken care of. We will be in touch with you post the webinar as well. We'll give you further details about the arrangements and how the campus visits are done and how to go about it. Over to the professors to answer the question that you had put forward.
I think what we had in mind when you said, if you're reasonable mathematics, you should pick up ICSE or CBSE's class 12th, 11th, 12th maths book, what is tested in CBSE or ICSE class 12th exam. And I'm sure your friends or nephew or niece or so on may have maybe at that age group. So if you're comfortable with that mathematics, you're in good position. At least the base case is concerned. This is the minimum we require. Of course, the more you have, the better it is. So because we're going to take you from beginners to a reasonably advanced level, the learning curve will be quite steep. And if you do not have reasonably good facility with mathematics, you will get left behind. Everybody will have to work hard. There's no denying the fact many of participants are practitioners working in the industry. Only some of them are students usually. So they will not have as much difficulty who are students and just out of college. But for anybody who is left college, say 3-4 years ago, 5 years ago, will have to work regardless of their math background. So this program has a steep learning curve. But for those who find uncomfortable reading class 11th, 12th textbook, we would caution that maybe think about it before you spend money and time joining this program. There are other programs at IIMA that you might be interested in, which also have derivatives component, but not as mathematical as that. So that would be a good sort of hygiene test for yourself. But the easy thing today, if I can add, is that you have so many MOOCs available, Coursera, edX, Udemy, which can take you very quickly from class 10th level to class 12th level in a matter of a couple of months. And so if you are keen to do a program like this, but do not have the mathematical prerequisites, you should showcase to VC now that you have done this program from Coursera or Udemy or edX or whatever. Then we'll accept you. We are okay with that. So we are not saying that you must have definitely 10 plus 2 mathematics, but if you don't have it, you should tell us that you're comfortable in mathematics. But if you're not, you will then curse us later on that you took our money and we don't understand what's going on in the program. We don't want to be in that position. We don't really want too many participants just for the sake of filling up numbers. We want people who are reasonably prepared to take the best out of this program. So please think about it and see that you're ready to invest both financially and time-wise in this program.
So just one small point to add to what Mr. Vineet was saying. You also think about what is the industry that we are aiming for, right? Because if you're planning to transition to a role in quantitative finance or risk management, both of these roles are very much mathematical in nature. So a solid foundation is mathematics is going to be required irrespective of whether you're going to this course or some other course. If you want to prep for a career in this particular domain, you need to equip yourself accordingly, right? So think about where you want to go and then think about whether this particular program is a good fit for you or not. Okay.
Indeed. Thank you, professors. So I'll take up the next question, in fact, because it's about placement support. So Rohan Verma asks the question. Rohan, basically, this is an executive, education program. I'm sure professors would also agree with that. And
So
this is all about.
Shreyasi, let me respond to that. IIMA does not provide placement support for any executive education program, regardless whether it's this program or any other program. So that's IIMA rules are very clear, and IIMA board sets those rules. So yeah, sorry, there is no placement support not only in this program but in any program offered by IIMA for executives. Only for full-time residential programs, IIMA offers placement support, and for no other program. That's
Yes,
how things are right
absolutely.
now.
But I think we can add one more thing is what we have seen as part of this program is you usually have a cohort which is comprised of people working in the industry in this particular sort of similar sort of roles who want to improve their skills. We also have people who want to transition into this sort of roles. So often people who are trying to transition into this sort of roles, though we do not have an explicit sort of a placement support, they are sort of able to network themselves into getting them some sort of an opportunity where they can showcase their preparedness for those roles, right? So though institutionally we do not provide any support, but people who go through these programs are able to find some of these opportunities on their own.
In fact, if I can add to what my colleague rightly said, you also make friends when you join a program like this. You also make a network when you join a program like this. So we have in the previous batch, we had cohort had people from Goldman Sachs, Deutsche Bank, and many other well-known financial institutions. And when you become friends, you see they can get more easily circulated across those companies. And they also want sometimes people from a program like this because they know what IIMA and our program stand for. So it can sort of reduce the time to get a job in some of these well-known banks and their KPOs in India. But no, sorry, we do not have institutional support. But I think the network that IIMA provides, and you also become very close to alumni. You say 64 sessions, you're just 20 sessions away from being an IIMA alumni of sorts. Then of course you get the full family of IIMA graduates to write to that you're also an alum of IIMA. So it gets you reasonably close. But yeah. And I think people do benefit in the process.
Yes. Okay, we have another question. How does it compare to a master's in financial engineering, a 12-month course? That's a, yeah.
So of course, masters will cover more. If you can afford the time and the money, we would recommend that that would be a more thorough and more in-depth understanding of what we do in this program. This program covers a bit of everything that a MFA will cover in the US or Singapore or Hong Kong. But yeah, if you can afford the time, we would definitely recommend that those kind of programs offer more depth and also full-time academic experience along with perhaps a placement support. But those programs typically cost upward of 1.5 crores, about 40 times what this program is priced at. So if you want to get a flavor of if that really is worth for you to spend, that roughly 2 crores in a program like this in the US, it might be a good idea to do a program like this so that you get a feel of whether you fit in, whether you get that curriculum and you really enjoy the curriculum before you spend all that money and take off 1 to 2 years from your life. But yeah, if you can afford the time and the resources, definitely you would recommend that you do a full-time program from a good master's education program. But yeah, this program does cover a bit of everything in a, of course, more concise and more practical, applied, application-oriented way. So this will be, if you compare this with the MFE, this will feel a little bit shallow because it is a much shorter program compared to what an MFE offers. Yeah, so there you are. But we found that in the previous batch, we had a couple of students, young students, or just early into their career. They took this program keeping that in mind, that they were considering an MFA in the US, and they could afford that perhaps, but they said, okay, we wanted to get a sense of what we are getting into professionally. Because as it turns out, in India, most colleges cannot provide that kind of exposure in finance and mathematics together that we can provide, or business schools can provide. So it becomes a good, so perhaps a litmus test or a starting point, or just dip your feet in and see whether you like it or not before you take the plunge and spend all the resources. Yeah.
Indeed. Professor, before we take up more questions from the chat box, should we allow the people who have raised their hands? They have been in that state for a while. So should we allow them to come up with their queries before
Up to
we
you.
again go back to the chat box?
Yeah,
Right.
it's
Okay.
completely up to you.
Yeah, so I would request Ankur Bajaj to kindly unmute yourself and you can share your question, please, with the professors.
Thanks, Professor, for the wonderful insight about the program. So, like, I have a question mainly from my personal context. So, I have been into into more of a accounting and finance side of the of my work. So, actually, I did my graduation way back about 25 years back, like in 2001, and since then, I have been more into this accounting and finance background. So, like in real terms, so I have not actually applied the the mathematical concepts into my process actually. So would it be useful for me to get into this program and see the other side of how that risk is getting managed actually? So I'm actually working into bank only, so global bank only into a treasury operation. So this has been like normally I am aware of all these terms, what is being basically like told in this particular program, but I'm thinking from my practical perspective, is it advisable to get into this program? Like, what's your view on that?
So it's very, very hard for us to put yourself into your shoes, because you're the best person who can judge based on the content of the program. But if you feel the need to learn a little bit of the foundation of risk management, I'm assuming that you are in that field or in that area, then yes, this program will help you. Whether the Black-Scholes and the option pricing side will help you too much, I'm not sure. But the latter half of the program, which is on risk management, will definitely contribute to your learning of principles behind modern risk management regulation, if that's the kind of thing that interests you. Their accounting experience, I'm afraid, will not be too helpful. You'll understand the finance side better that way if you're having the accounting background. You'll also relate why we have regulations perhaps better than the other participants. But I think the only part, perhaps, what you said briefly, the second half of the program will probably appeal to you more in terms of foundation of risk management and where the world is moving towards in terms of risk metrics going forward in India as well as globally. Anirban, yeah, if you want to add.
No, I think that's perfect. I think I don't think I have anything to add to that.
Yeah, currently, like I'm part of stress testing, so global stress testing. So mainly we analyze the bank balance sheet and the sensitivity of
So I think that part of the program will definitely be useful to you to understand where does those rules of stress testing come from, and we do spend some time on that. What is the mathematics behind stress testing, for example?
Yeah,
Again, if you're curious on that side, because you don't have to know the mathematics of stress testing, a job goes on regardless, really. When you understand, being so experienced, life goes on even if you don't know the math behind stress testing. But if that excites you, if you're curious about that, yes, we would recommend that. I think you would benefit from the program, we believe, at least on that side. Not in the first half. The first half probably has to be just academic curiosity for you to for that point, because you might feel a little bit, what am I doing here? So
unless you are planning to move into other department of your bank, which deals with some of the structured products or derivative products, or if you have any experience or if you have any other exposure in that particular domain. But the second part of the program would be much more relevant for your day-to-day life, so to say.
yeah. So that's also what I can make it out of the program.
We cannot have one person.
Yeah, sure.
You can send an email to both of us via VC now, and we'll respond to you perhaps in more detail over email. We can do that.
Yes.
Thank you.
So right now, because there are other participants also who have queries, so please give them time to it. Thanks. But you can mail us, we'll respond reasonably quickly.
Yes, so I move on to the next person. Abhishek Rana, can you please unmute yourself? You can please share your question. Post that.
Yeah, hello, professors. So I had the query regarding the end result of the program in terms of outcomes. So if I say, would I be able to design a risk management model from ground up, or coming to the derivative side, would I be able to design custom OTC derivatives as per the requirement of clients in terms of skill sets? Like assuming I have none right now, let's assume that. So
No,
would this
Abhishek, you
program?
will not be able to do that. So let's not sort of promise more than what we deliver in a program like this. You will be able to understand what banks offer today and why that makes sense. Why does Goldman Sachs offer products like this, Morgan Stanley, JP Morgan? So this world is quite by now quite sophisticated. We are talking about 50 years worth of development, R&D sort of in the world of derivatives and risk management. And we cannot, no, even if we want to in 6 months' time, 64 session, we cannot do that. So our sort of modest or more humble effort here is to make people ready for a job market if they want to get into this area, and also understand. And of course, people who are creative can design on their own. But idea is to fill the gap from where you are and know what modern financial institutions do in terms of option pricing and risk management. But of course, there are creative people. Maybe you are one of them who can take that learning and come up with something new. But no, this program alone will not be able to promise that. And something like you will need 5 years experience and an MFE perhaps to get to a place where you perhaps aspire to. But at least it'll get to a place where you can talk to a JP Morgan and Goldman Sachs quant or risk manager.
Okay, thanks.
Yes, I move on to the next person. We have two more people who have their hands raised. We'll just take the queries very quickly before we move on to the chat box. Shivendra Pandey, if you can please unmute yourself, you can please ask your query.
Yeah. Hello, professors. So yeah, basically, so mainly I work on the trading systems, and I have more than 20 years of experience in building the trading system. So I worked for Morgan Stanley in the past, and currently, I have a close proprietary. I'm working with a close proprietary trading firm. We are 3-4 people. So I built a derivatives trading system, so in HFT and MFT both. So the reason I'm looking into this program is what I'm looking for the program, whether I will get it or not. So I closely work with the quants, so and who design the trading strategies. So I face problems understanding the models sometimes. Like I have a curiosity in this to understanding that. So the goal I'm looking for is the deep understanding of these things, so that I should be able to understand the things more clearly. So I'm working very closely with the quants. So and yeah. So am I clear?
Professor, you are on mute, Professor Vemani.
I was just saying that man, perhaps your best place to take this up. Yeah.
Yeah. So if I possibly can rephrase what you just said, you want to understand the language that the quants are speaking in a possibly better way. Is that a good sort of reasonable summary of what you're trying to say?
No. So I understand the language of quants very. So since I'm working
Yeah.
for too long with them, so that's not a problem. So I also understand how they design the strategies, and also that's not a problem. My goal is and terminology and everything is clear. So I understand the maths also. But the thing is that so my role is more on the technology side, like building the trading systems and all. But I want to understand that part of the world also. In deeper knowledge of that part of the world.
So I think that's what I was trying to mean earlier also. So if you want to say that you want to get a deeper sort of an understanding, I think we are trying to provide reasonable depth in terms of what we are planning to cover. So, but again, depth is something which is possibly better understood from your point of view. So what you are considering as a deep understanding may not be very same as what we may be considering or what we may be covering as part of the course. But from your point of view, if you're saying that you're able to interpret the trading strategies in terms of the technology, but you want to better understand the products per se, I think that's what you're trying to aim through this particular product, so that you get a deeper understanding of the product and how the math works, so to say, not just the execution of that in terms of a trading system. Okay.
Yeah.
But whether to what extent it would be helpful to you possibly also depends on what is that exactly you are looking for. Right. Vinny, do you want to add
Yeah, so
anything?
no, nothing. You can maybe mail us if you have, because your question is not fully clear to us right now. You can mail us and we'll get back to you with what we believe might be the best goal. But if your focus is HFT and algorithmic trading, as my colleague already said, the only limited part of that is covered in this program. This program is more focused toward pricing and risk management. If that is what you're interested in, yes, this program might be a good worthwhile for you. But if you're focused on HFT and algo trading itself, as my colleague said, no, it only has a limited, coverage of that kind of part of finance.
Okay,
I'll
thanks.
quickly take up a couple of more questions in the chat box. Abhishek Das writes, "Hi, I'm a 42-year-old corporate and started my career in 2009 and was with HSBC and was building models for credit rating and risk, but never got to build from scratch and then pivoted to more product companies. How does the module 2 or 3 allow me to build a capability for me to leverage risk models for other industry?"
So again,
Okay.
let me just come in here, because there was a question earlier also about can I create something new on my own? So
Yes.
there's one thing one must understand about the world of risk. Nobody wants to do risk management. The banks have to do it because regulators ask them to do it. And then there's a whole bunch of 2000 word regulation that we have to conform to. So all the banks that they do is meet the requirements required by the local regulator. And the job of this program, second and third module, is that to get to a place where you can understand the regulation document in more detail than perhaps you can on your own. So there is no creativity as such beyond structured product. That's the only part where you can be creative about, to create new products for risk management or hedging needs of a client, where you become a seller or a structure. Other than that, much of this program is really about understanding the modern world of how to deal with the bank's regulation and also understand a bit of pricing of derivatives in the process. And that's what we aim to do in this program. So yeah, so if you're already working in the world of credit rating and modeling, this program will perhaps better equip you with the modern models for risk management in the world of credit, market risk, model risk, and operational risk. And that's what we will do, and provide more mathematical foundation behind some of those modern principles of risk management. But yeah, let me, again, for those who are working in a bank, you understand this very clearly. Banks do it because they're required to do it. But today that's a lot. And that's why you need programs like FRM and MFE and all of that. That's why there's a huge demand for programs like this, because all banks must hire these people to be able to meet the requirements of regulators. Only a very small part of the quant world is about mathematics for making money, which is partly HFT side, algo side, and partly to do with derivatives, pricing. But a large part of that is to do with the regulatory requirements.
Thank you, Professor. I quickly move on to the next question. What additional value would this provide to someone who is on the CFA path and has IT plus econometrics background?
I think for those who are planning or those who are already doing CFA, there will be some sort of an overlap between the coverages, right? But what we are trying to do is possibly go in depth in these two specific modules, possibly slightly more than what CFA would be doing. Possibly if you are planning for not just CFA, but some sort of a risk management, similar sort of a certification also, there will be a larger overlap with the second part, so to say. Vineet?
I think if you're already doing CFA, obviously you seem to be interested in finance and learning more about it. I think this program will benefit you in terms of complementing what CFA does. There's only very little overlap in module 1 in what CFA does in terms of financial products and basic ideas of no arbitrage. Other than that, CFA will not teach you pretty much nothing of module 2 and module 3. There's some overlap with FRM in module 3.
Right.
But that's a smallish overlap. But there is some overlap with FRM for those who know about the FRM certification. Yeah, so I think it complements nicely with what you're already studying in your curriculum in CFA.
Great. Thank you, Professor. Moving on to the next question. How does the course help? Is it for career advancement in financial domain from job point of view, or it also helps to build strategies and perform intraday swing trade and portfolio management?
So I think it's not the second part, definitely, as we have sort of repeatedly mentioned. We don't do portfolio management also as part of this particular course. So there'll be some part of it, which what was the first part? I sort of missed it. One more. Can you repeat the question one more time?
Yeah. So the question, the first part of the question was about the job advancement from a career point of view. The second part was, would it help in building strategies and perform intraday swing trading and portfolio management? That was the question. The second part of the question.
Yeah, if you're trying to move, as we have sort of repeatedly said, if you're trying to move, if you have interest in finance, if you're trying to move to a role with quantitative finance and risk management, and you're interested in understanding the basic sort of core principles, the mathematics of these particular areas, then the program would be useful. Whether this is going to be relevant for career advancement for you would be dependent on what stage of your career you are currently in, which I'm not very clear about it from the question itself. But again, the later part, which was in terms of coming up with a trading strategy, that's not the intended outcome of the course. But based on what we cover, if you can connect those dots and take it to a trading strategy which can be implemented, that's possible. But as part of the program outcomes, I think that's not what you're looking for. Portfolio optimization, again, is not something we are covering as part of this particular course.
Right. So I'm moving on to the next question. What is the applicability and relevance to the Indian F&O markets in contemporary times, especially due to skews created by players like Jane Street? In a nutshell, will it help the participants trade and manage their risk better while operating in the Indian markets? Very related to the earlier couple of questions as well.
So manage risk, yes. Beat Jane Street, no. That requires a different kind of scale to do that, because they have a lot of money with them. That allows a lot of flexibility in terms of making money. So the money making part, no. But the latter part, risk management or understanding the skew itself, what skew means mathematically, how to manage the skew via derivative products, definitely yes. What Greeks are relevant for skew? Yes. Which Greeks are to worry about when you're dealing with a skew product or skew portfolio? Yes. To make money off the skew? No, we will not guarantee that you'll make money. We will not even recommend that you fight with Jane Street. But yeah, you can get a job perhaps with Jane Street with a program like this. You can cross a couple of rounds of interviews with Jane Street if that is something that might interest you eventually.
Right. So another question would be, I am from an engineering background and working in sales, but I need to shift from current role to this profile. Will it be relevant and extent to which it would be suggested? That is a question.
I think my colleague said we need to know a little bit more about where you are and what you do for a living before we can sort of give a more appropriate response. So maybe you can mail us. I think we're running out of time also a little bit from what I gathered from the time. And Shreyasi also has to do her job in terms of telling you more about the logistics of the program. Yeah, so for those who have more personalized questions, maybe we would recommend that you can mail us. Either VC Norm, you can mail us directly. That's also fine. But do refer to the webinar. We can understand where you're coming from. I can see one question on Islamic finance. Sorry, we don't cover anything of Islamic finance in this program. It will not help you to get a job in Malaysia or the Gulf region. There are other programs perhaps in the country which do that, but sorry, this program will not cover any of that.
Yes. So, Professor, I should take up a couple of more questions, if that is okay. Yes. So, what is the percentage of theory and practical exposure in the program? How practical is the course? That's the question specifically.
It's all practical, my friend. But that practice required a lot of mathematics. That's the only difference. It's all about real world only. This program is all about the real world of risk management, real world of derivative pricing and structuring. And all of that is done in practice every day by large financial institutions. But as it turns out, that practice required a fair bit of mathematics. So that's what we are trying to do here. It's all practical. There's nothing for ivory tower or just dreaming about mathematics for the sake of mathematics. It is quite practical, to be honest.
Right. Quickly moving on to the next question. I am from AI engineering domain, and I am wondering how could this program be suited for a profile such as mine in contrast to CFA FRM paths to switch fields and move towards risk analytics and management?
Well, I think fits perfectly with what you are doing, what you want to do. Anirban, yeah.
No, I think this is a sort of thing we have repeated also earlier. So your graduation possibly helps you through some of the understand the basic mathematical principles, right? And then if you have an interest in finance, you can pick up the other things as we go in the program. So if you're someone who has some sort of an understanding of the AI field per se, and if you have interest in finance, if you apply yourself in this particular program or in this particular domain, possibly you can move ahead in the career in that particular area.
No, but I think given what you want to do, risk analytics, the second half of the program is tailor-made.
It's absolutely suitable for you.
Perfect fit for you.
Yes. So we do have a lot of other questions in the chat box, right? So before I move on with the rest of the queries, we'll be trying to take up as many of them as possible for this evening, but the number of questions seem to be much on the higher side. So one thing I want to let all of you know, whoever has a question or a query with regards to the program contents and the modules and everything else, we are going to be in touch with you post the webinar as well. You will be sent the recording link of the webinar along with the brochure of the program and other details. I would also be sharing some basic information about the program itself before we close the session for this evening. And please don't fret, we will be in touch with you. We can also forward the specific queries that you may have in order to get them addressed to understand how it's going to help you in a better manner. So Professor, I'm just taking up a couple of more questions on a random basis. Just a moment. Basel style capital and liquidity frameworks are supplemented by IFSB. Okay, I think we have already answered this. Professor Virmani, you
So there will be coverage of Basel norms in some detail, both on market risk and credit risk side. Yeah,
right.
Again, we can't spend too much time on those. What details will be there? You can, we can write to us via VC now. Can give you an outline of what we plan to cover, but.
Of course, yes. I am interested in risk management and have done maths till 10th. Should I do this course or FRM and then apply to this program in the near future? Again, a very specific query.
No, please sort out your maths till class 12 or do a program on Coursera, get a certificate from one of those online platform, then tell VC now, then we can accept you. But with just class 10th mathematics, I'm afraid we'll have to reject anybody with just class 10 mathematics. They're not accepting by the rule, unless you can showcase that you've done something beyond class 10th in mathematics. So sorry if it sounds strict, but we don't want to take any chances in terms of you getting upset after joining the program. We don't want to be in that position.
Indeed. On a similar light, we have another question. If someone understands CFA level 1 maths and quants, is that enough to pursue this course or is more advanced math required? Please guide, sir. Will that be good enough? That's the question, basically.
There's not that much math in CFA level 1, is it? At least from what I remember from the old CFA curriculum, there's only limited amount of statistics that is used for portfolio theory and CAPM and things like that. And a bit of derivatives and correlation and ideas of correlation and so on. So yes, okay to the extent that you can understand CFA level 1. But yeah, if you have up to 12th maths, yeah, that's ideal. But yeah, that doesn't tell us much actually, because CFA level 1 maths is not really that much. It's mostly statistics. Yeah. They hardly any probability theory in CFA level 1. From what I
think an easier sort of an estimate is if you have maths in your +2 sort of a level, it equips you with this sort of basic blocks that are required for this particular program.
Yeah, so it just makes us feel more safe and assured about your preparation for the program. Because so you believe us, because when you say that a couple of people dropped out of the program after joining because they couldn't handle the mathematics. And so we don't want anybody to be in that position, having spent the money and not following what is going on in the program. And this part of finance is somewhat mathematical. And we cannot overemphasize the fact, I'm afraid. So yeah, the 10+2 maths is a requirement or something equivalent to the requirement. And we got to work with that.
Just one more question, which has come up just recently in the past few seconds. I'm just repeating the question for everybody else. I'm a working professional in high frequency trading HFT with experience in quantitative research, low latency systems, and market microstructure. Will this program strengthen my application for a PhD in IIMA? Okay.
Well,
That
it
took a
depends
different
a
turn.
lot on how well you do in this program. So we will not know until you finish this program whether you get benefit of that or you get disadvantage of that. So your outcome, your performance tells us a lot about. I'm just joking, really. If you're considering a PhD, this program is not at all requirement. If you do it, of course, you will get a sense of how IIMA people teach. IIMA faculty goes about teaching finance. But no, if you're considering PhD, don't spend all this money. Not required to spend giving us all this money. Directly focus on a PhD preparation, write CAT, GMAT, whatever is required, and then directly apply for the PhD program. But if you want to learn about quantitative finance, yes, that's a different question. But don't mix the two. Not quite appropriate.
So this may be useful for you based on your personal interest in quantitative finance and risk management, but is not required for your preparation for a PhD program at IIM.
You should, I think, focus on the latter PhD, and this you can do anytime in your life. Not an issue.
Right. So, professors, we are already beyond our scheduled time is 7:36. So, with your due permission, I would just like to share some basic information about the program, although we will be sharing that with every participant individually as well.
I just noticed one question, Shreyasi, that I will
just share my screen and share
just
the slide.
Just 1 second.
Sure, Professor.
With IMB has a program which they launched this year. I think the curriculum is similar, but this is their first batch, so we can't say for sure what they're covering. But we can make a judgment of the curriculum based on what is available out there in public domain. We only know that much. But in this, we do have 1 year experience here. You can talk to some cohort which graduated last year from this program and get a sense of what we cover from the horse's mouth who spent the money in this program. And they are on LinkedIn and so on. But I'm afraid we don't know at all much beyond their outline that is available on the website, which doesn't tell that much beyond the point.
Right. I'll just share my screen, professors, if that is okay.
Yeah, sure.
Yeah. Yes, I'll just give you some basic information about the program itself, as many of you have shared the query in the chat box as well. We will be getting in touch with you individually. As mentioned earlier, you'll be receiving the brochure and the other details about the program as well. This is the second cohort of APQFRM, that is the Advanced Program in Quantitative Finance and Risk Management from IIM Ahmedabad in association with VC Now. It is an 8 to 9 months duration program, and to be eligible for joining this, you will have to be a graduate or a postgraduate with more than 50% aggregate marks. You should have a work experience, and you can also be a final year candidate of 4 years graduate degree programs in engineering, management, physics, and computer science. The mode of delivery would be live online. You can attend the sessions from the convenience of your home or your office. You have to just log into the session from your laptop. There would also be a campus module wherein you will have to visit the IIM Ahmedabad campus, and you can mingle with the faculty members and your other cohort members, which is going to be an interesting experience in itself, as we have mentioned earlier. The campus module is of 4 days, 2 days at the start of the program and 2 days towards the end of the program. That will also be comprising of presentation examinations towards the end and certification ceremony. The campus attendance is definitely mandatory for you to complete the program and be awarded with the certification. The sessions are scheduled on every Saturday, 3 p.m. to 6 p.m., which makes it quite convenient for working professionals like you to attend the sessions. You will be awarded with a certificate of completion from IIM Ahmedabad upon meeting the criteria for completion of the program at your end. The program fee is 4 lakhs plus 18% GST, which is payable in 2 installments. And as an application fee, when you apply for the program, you will have to pay 2,000 rupees plus 18% GST. These are the basic information. And also, we do not have too many seats available for the program itself. We have limited seats available. And the last date of application in accordance to that is the 18th of July, about 8 days from now. So if in case you are interested in upskilling yourself in this domain and whatever we have shared today makes makes sense to you and is relevant to your career path or your career progression, I would request you to be in touch with us and apply for it as soon as possible. We do have limited seats, as mentioned. That said, the schedule for the program is also on screen. We have a technical orientation on the 4th of August, followed by the first campus and the batch commencement in the month of August itself, on the 11th and 12th. The last campus and the batch end is supposed to happen in the month of April next year. For any concerns and queries, please note down this email ID, which has been shared by my colleague Somak in the chat box as well. You can reach out to him. You can also call him on these numbers, which are mentioned on screen, for your queries to be addressed on a one-to-one basis. We will anyway be getting in touch with all of you as well. So Somak would request you to please share your numbers in the chat box for the benefit of all our participants. They can also copy paste from there and save it for later use. I will stop my screen share.
So I would just add that to share, see this thing, once for those who register in the program, we'll also share the exact math requirement before the program begins. So whatever you need to revise before the program begins, but only for those who eventually register for the program. So around the technical orientation time, we'll also share a set of exact modules in mathematics that we expect before you land at IIMA. We'll also do a revise of all the math that you're required to do. One of our colleagues who's a mathematician will do that for us. So you don't have to necessarily do that, but for those who register for the program, we'll get sort of more up-to-date information about what is expected before you land in the program. And again, I think I mentioned this earlier. For those who register, this program will require a reasonable amount of work before you, when you're doing this program. This is not one of those programs where you can just show up to the class and and get something out of it. You have to prepare and read the math and the chapters in the book given to you before you before you come to the classroom. And from that point of view, there's couple of questions about MBA. This program is not at all like MBA. In this program, you only do two things: finance and mathematics. MBA covers all managerial disciplines, as my colleague mentioned earlier, from operations, strategy, HR, marketing. We don't do any of that here. We only do two things, and two things somewhat deeply. That is mathematics and finance and risk.
Right.
I think this is basically ties up to one of the questions, which is this similar to BPGP? So BPGP is our online MBA program, right? This is not an MBA program. This is a program focused on quantitative finance and risk management. Which program is suitable for you depends on your career aspirations and where you are right now.
Right. Thank you so much, professors, for addressing with patience all the questions that we had. And we are already behind our scheduled time of 7:30. It's 7:43. Thank you so much for taking time out this evening and also extending the time that we had initially booked with both of you for today's webinar. And thank you so much for all the participants as well for joining us today and for interacting with us. We will be in touch with you as mentioned. And thank you once again, professors, for your time.
Thank you to you too, Shreyasi, for anchoring it so well. Thank you.
Thank you.
Thank you.
Thank you.
Yeah.
Bye.
Have a great evening ahead, everybody. Thank you so much.
Bye.